The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, more heavy losses seen in the grain and oilseed trade on Wednesday as many folks taking weather premium out of this market, it appears, with better rain in the forecast over the next couple of days ahead into the weekend. We're going to try to make sense of it all, look bigger picture. Mike Zuzolo, Global Commodity Analytics, is here to help us do that today. Mike, always great to catch up with you, my friend. I hope you're having a great week so far.
Having a great week, just doing a lot of talking about these markets. Great intro, Jesse. Great to be with you today.
Well, thanks so much for the time, and I'm gonna throw another one in there. I'm gonna create a new term, a bearish battering ram, so to speak, in this grain market. Last 2 days, just ugly. A lot of folks just taking premium, taking money off the trading floor, so to speak, here. And obviously weather is the big storyline here. A lot of traders, a lot of folks are convinced that these rains will verify over the next couple of days. What's your take on, is that kind of the big catalyst you're seeing as to this pullback in the grains, is just the fact that we actually think the rains are going to fall this time?
I think it's part of it. I mean, I think you've certainly lost that leg of the stool to be able to sit on as far as being bullish and keeping the bullish momentum. And we shot higher so quickly, mainly on the spreads, mainly on the technicals, but also on the wheat market. And I will interject, as I oftentimes do, the wheat market, because not because I like it so much, but because it really does just look like percentage gains and percentage losses. Just look at it from that perspective. It's still the leader. It was the leader down for the last year. It was the leader up out of this hole that we had with Europe and the United States markets, both going up about 18%, soft red wheat, French wheat in Rhone, France, in the cash market. That weather helped the wheat. That weather helped the corn. The weather, and I think this is an important point of it, the weather helped the European markets and the U.S. markets. And now what we've essentially taken away is the European wheat and corn markets, the U.S. wheat and corn markets, as far as the weather side of the equation goes. And we've transitioned now in a very aggressive manner back towards a harvest type mindset in the wheat. And I say that very gingerly, because I know how painful it is to have the crop conditions in corn 6 points worse than they were in 2012 in this time period. Worst corn and bean, good to excellent conditions since 1988. Arguably the worst late 20th century drought that the United States ever experienced. We are dealing with historic crop problems. The market acts like we have a very big crop being grown. What squares that circle, in my opinion, Jesse, is the wheat market, because unfortunately, without good, strong demand, wheat keeps leading this market. And that to me, I know it sounds oversimplified, but I really do think the analysis fits that.
Well, I just want to, on the video feed, pull up the latest weather model runs, and these are from our friend Eric Snodgrass at Nutrien. This is the Euro, and you can see, that kind of that corridor from eastern Nebraska, southern Iowa, northern Missouri, into central Illinois, Indiana, etc. Looking like that potential is there. I'll flip it to the GFS, kind of the same thing. Both these models are lining up a little bit. So to your comment about kind of losing that one leg of the stool, it seems to me like this is the first time in a while, Mike, that we've gotten both of these models to agree, for the most part, that rains are on the way.
It's an extremely valuable point to make, that both models agree. It's in the shorter term. It's between now and the weekend. And both models, most importantly, show that the ridge is breaking down, that we're going to get rain after rain after rain after rain. This is the beginning of the rains that will go all the way into Monday, Tuesday of next week. And the mediagram for Champaign, Illinois has gone from 2 chances in the next 14 days to about 8 chances in the next 14 days. The trade is picking up on that. I do agree with that wholeheartedly, especially other analysts that have made weather such a big deal, because it's not just one rain and then we go back hot and dry. It does appear to be a pattern change. But I would also introduce the new news that we have that helps explain the European market falling almost as much as our market has fallen now. And that is the Ukrainian crop has grown in the last 48 hours, Jesse. And the Ukrainian Grain Association is stacking the crop up to 24 million tons. That compares to 16.5 from USDA. This is wheat in Ukraine, and 17 million from the official Ukrainian Ag Ministry. You're talking about a 40% bigger crop than what we thought just 2 days ago. And the heart and soul of that is that most of that is probably going to hit the export market. So we're back in that same old mindset we have been in the last year, that Russian wheat, Black Sea wheat is going to burden the supplies. It's going to take all the demand away from us. And then you have Bulgaria out there too, that's looking at a 6 million ton crop. Part of that is going to get exported. Unfortunately, every million ton extra supply number of wheat that you throw on the world marketplace, the funds treat like it's 10 or 15 million tons. That's the major issue that is hard for clients to get their arms around.
Mike, I want to hone in a little bit more on some of the other, legs of this stool, the demand picture more, and talk bigger picture. I'll pull up on the video feed the Bloomberg Commodity Index. You and I have looked at these quite a few times. I want to catch up on this. What are you seeing here that could kind of maybe help explain some of this a little bit more bigger picture?
Yeah, I keep redrawing the wedge. The market keeps pushing out the change in the trend, in other words. And I think this chart in that black and orange area that's pretty hard to see, what I write there is I think this is one of the best charts to show market sentiment, because the trade keeps pushing out what it wants to do in terms of a trend. And this vicious cycle that we've been in of sharply higher and then sharply lower, this chart represents that very, very well. The other thing that I'll point out is that we still have in this weekly chart a buy signal down at the bottom where that blue bull is. There's still a buy signal and a divergence to buy in those stochastics. And you don't get a divergence to buy is a double bottom in a stochastics, roughly speaking, Jesse. You don't get that very often. In fact, if you go all the way back to 2011, 2012, when this chart began, you got a couple back during that time period, but it's very hard to get a double buy signal. In other words, a double bottom in the stochastics. And so this represents my feelings about the market very, very well. What happened to the buy? What happened to the tight supplies? What happened to El Nino? This chart, I think, reflects it very well, and it's going to be a leading indicator for the clients that I work with.
Another piece of this puzzle as well here, end of the week, Friday, we have grain stocks numbers. We have the acreage numbers coming up, and I want to talk about that a little bit as well. On the video feed, I'll pull up our July, November bean spread chart. What are your thoughts heading into these key reports, especially on the grain stock side, Mike?
Yeah, grain stocks, we haven't reconciled the size of last year's crop, and that's what this spread says to me. The July minus November beans earlier this week, just yesterday, was closer to $2.10. Now July is in delivery. July futures is in delivery. We saw the July really get hit hard today, and that is shown by that spread breaking to 188.5. This was before the close. But you still are in the upper end of the ranges that are contract highs here. So are we going to go all the way back down to 150? Are we going to go all the way back down to 112, 110 area? I think what's going to decide that is the grain stocks number. The trade is thinking about 810 million bushels of beans, average trade guess from Reuters, and about 4.25 billion for the June 1 corn stocks. Corn spread has also got a big premium still of over 50 cents in the July over the December, 50 cents over the July versus the September. And so September gets ready to become the new lead month. I think these are extremely critical charts, and that makes that grain stocks number extremely critical as well.
Expand a little more on the corn side. I'll flip charts here. The December corn historical chart, and heading into this big USDA report day Friday. What are your thoughts on the corn side here, Mike?
Yeah, talk about a head fake. A lot of people were talking about how this market was a lot like 2013, and then all of a sudden we jumped into more of a 2012 or 2008 mindset, and we did start to look a lot like 2008 in before the end of last week. And I think this is where we've now recalibrated again. And instead of going up and making a double top, and this is what I've been talking to clients about, Jesse, I feel like the fundamentals justify us going up one more time to test those old highs that we just put in. Maybe it'll have to be on the next WASDE report because USDA cuts the yield. We'll see. But right now, the trade has definitively chosen to put a high in place and take out the old range highs and start going down towards that gap at 533 in the December corn. I think my undervalue level of 540 is a very good number because that's your last summer lows, and it puts you at about a 1718 carryover. And I think that's where we're at this point. So I don't mind going down and filling that gap, cleaning the chart up, but I still think if the wheat market allows us, we will find some movement back higher, and we don't have to just go down all the way into the rest of the year like we did in 2013. And that's been a big question by producers I've talked to.
And Mike, one other thought I'll throw out there as well, on top of USDA numbers and the weather market issues and more, we have end of the month, end of the quarter. I have to think that's going to lend itself to plenty of volatility in this market trade as well as we head to the 4th of July holiday.
Yeah, I think we got to watch the volume indicators very carefully. I think you're 100% spot on. And we also don't have a 3-day holiday weekend. That, I think, has disrupted the funds because they usually are used to that on the July 4th holiday. And remember, funds typically trade the data, the historical data, and they feed that into a calculus algorithm that tries to predict what's around the corner. This is a little bit of a hiccup, I suspect. And I think all those things combined, we're just going to stay very volatile here, I think, for the next several weeks, even if we get the rains, especially with some of these key indicators and charts on a monthly basis, like the Dees corn continuation, like the Nove bean continuation, actually giving buy signals on some of my monthly charts.
We're having a conversation today with Mike Zuzolo of Global Commodity Analytics. Mike, let's talk livestock feeder market. Good couple of days, Tuesday, Wednesday. I got another chart for us to pull up on the video feed. We'll look at that weekly feeder chart. A decent reversal. I have to think the cheaper corn price is probably helping some there. But talk about what you're seeing in this feeder cattle market right now.
Yeah, this is kind of a chart clinic today with the feeders because this is a weekly feeder chart. We had a high several weeks back, 4 weeks back at 245.17. That's also on the monthly chart that matches up with the 2014, 2015 highs. And so we tested that 2014, 2015 level. So keeping that in the back of our mind, if we look at the move that we had 6 weeks ago with that very sharp move up, that would be kind of a flag pole that you could start talking about and a flag formation starting to form. And indeed, the last 5 weeks after that big move up, we have kind of been waving a flag in the air, so to speak. Now the question is, we went from that 205 area up to 245 area. So about $39, $40 is the rally move that we had. We've corrected. The flag is still in formation. If we go through that 245.17 level on a weekly close, then that flag becomes a swing objective. And there's a possibility, sometimes it happens, more often than not in my experience, that you get another $39 to $40 move higher on top of that 245.17. That's why I call it a swing objective. So what I'm getting at, Jesse, is because the weekly and monthly charts are lining up so nicely and we've got this possible flag formation, if you're hedged like I am, be hedged in puts at this point in the feeders. Do not let the market rip your head off with the $40 margin call, because that's kind of the market we're in right now. If the supply side is so uncertain and the demand is remaining strong, and we've had very good economic data this week. Consumer confidence was at an 18-month high. Housing starts, housing sales, both of them very, very good. So I'm inclined to think that it's possible the feeders can go on higher. I want to be watching for that as a hedger and not be in unlimited risk positions.
I should ask as well, and this can help us parlay into the fat cattle too. Cattle on feed report last Friday seemed pretty much in line. I know that placements number was a little bit bigger than some folks expected. That was maybe the only bearish thing I saw with that cattle on feed report. What did you think, Mike?
Yeah, and I think the cold storage numbers for both beef and pork just totally exonerated the placements numbers because we're now below 2022 levels in both pork and beef in cold storage, which the trade, I certainly was not expecting that big of a drawdown. I thought we actually were probably even with last year. So the next thing that we have to go through is on Thursday afternoon, the hogs and pigs report. That's going to be big because USDA says that we are done liquidating sows. They said that through their last WASDE report, didn't really pump up the pork production in Q3 or Q4. So I'm watching that kept for breeding number. Is it really 99 and a half, or is it going to be lower than that? And then that puts more meat on the table, more meat in the marketing channel in the last 2 quarters of the year. That could turn the cattle market into more of a negative bias because there's a very strong correlation right now, Jesse, between the cattle and the hogs.
Well, you mentioned the hogs there too a little bit, and cattle. Great thoughts as always. I'll open the floor to you, Mike. Any other final thoughts? Anything else you're watching here as we near the end of the month?
I think that we go back to the basics. We look at the wheat as our leader. We look at the dollar and the crude oil and the copper as leaders to the wheat market. And we look at the weather and the supply as what's driving this market. And as long as those things stay where they're at, you sell rallies, you hedge into the weather supply rallies. We don't have that demand market yet. I think it's coming, depending on how good China comes around and how our relationship with China goes the next 6 months. But I think the Asian El Nino and I think the Chinese and Asian demand is around the corner. So we'll see if that works out. But for right now, it's weather, supply, hedge, profit.
Well, Mike, if folks have questions, they want to look at your analysis, I know they could do that very easily online or with a phone call. How can they get a hold of you, Mike?
Best way is to go to globalcomresearch.com, and you'll get an overvalue and undervalue level that you can use for hedging corn, beans, wheat. And my undervalue is 540 in December corn, so I'll be doing catch-up purchases for cattle clients and for feed needs. So that's the kind of analysis you can get if you sign up for a trial there.
Fantastic. Mike Zuzolo with Global Commodity Analytics. Always great to catch up with you, sir. Have an awesome week and weekend and a happy 4th of July. And we'll talk to you again here real soon.
You do an amazing job with those charts and all this dialogue, Jesse. I'm impressed.
Well, always great to catch up with you. Thanks so much, Mike. We appreciate it.
Thank you.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.